Hello everybody, my name is Drew Dosick and welcome to Trading the Close. Guys, we were waiting for a long time for Nvidia's earnings yesterday and we finally got them. They double beat earnings per share and revenue plus fantastic guidance. Initially popped as we found out yesterday when we were doing Trading the Close. But then, man, every investor in Nvidia nearly was jamming that sell button today, making the pressure stress out the semiconductors today, hitting that area of support. But guys, by the end of the day, the S&P 500 all came back up right to where it was nearly in yesterday's price action. It was not looking that pretty earlier on in the day. Very hard selling pressure. We're going to go over Nvidia, tech earnings, and other stocks, plus customer requests or viewer requests here in a little bit. So stick around. Got a great show for you guys. But first up, guys, the next data release is going to be tomorrow. PPI data at 8:30 in the morning. Stay tuned for that. Plus, I'm going to be stepping in for Ben Poole's show on your best trade setups of the day tomorrow morning at 8:45. Don't miss that. I'll have some other great trade setups to go through with you at that point. All right, so let's jump into the S&P 500. We see the S&P 500 today down nearly just 0.5%. But guys, look at the 10-minute chart here. Nasty fall at the beginning of the day. Nearly opened up. You can see all of these candles down, including yesterday's closing candle. We had 7 candles straight down to start the day, then had a nice relief bounce. Selling pressure came back. But then we didn't end down here at the end of the day. We actually rallied back up, forming a near term just from about 1 o'clock on a bull flag. So at least for now, the markets aren't on the edge. You can see here we were much further down on the daily chart, finishing the day up like we're trying to put in consolidation in this range. Very impressive move on the S&P 500 today, since that wasn't the same case on Nvidia, the biggest company in the stock market. So let's look at the NASDAQ, and you can see the NASDAQ too took a massive hit today. It was all the way down here, but rallied back, not to finish as strong as the S&P 500, right in line with yesterday's candle. So you can tell the weighted selling on tech was heavier here, clearly displayed on this chart. Now, if we see here, the next resistance is 25,486, but since we've now broken up above this declining trend line, I highly recommend everybody to be paying attention to also the bottom end where the bottom can fall out. Notice we've had a larger time frame bear flag going on here. So the area where I start getting folks on the warning track is right here at 24,660 points. Be mindful of that. Obviously, to break this bear flag, we need to get underneath the bottom end of this pole here, but this will be the starting point where everything will start to look a little bit more murky. All right, guys, next up, the SMH. SMH, again, saved itself right here. Guys, we were talking about this not that long ago on the 17th of February when selling pressure came down, pierced this 50% area of the parallel, but it saved itself, pushed higher up on the charts until yesterday, and then today, kerplunk, right back down. But still, SMH is saved. It's in the top 50% of this parallel channel. After all, yesterday, we made new all-time highs and new all-time closing highs. So it's not doing that bad, but still, this is the break point, not far away. Tomorrow, be watching $410.84, how price action reacts in that area. Next up, we've got Bitcoin. Bitcoin today really just moved sideways, about 0.89% loss, but following up yesterday's green candle, this isn't that bad. You want to continue to see consolidation here, then a continuation pop to the next resistance area at $75,000 to $76,000 on the chart. Now we're going to go through another cryptocurrency, Ethereum. We haven't checked on Ethereum in quite a while. Yesterday's move up, coincidentally, tagged the resistance level of $2,147.80. Now you can see here too, that basically is the line in the sand to beat from this drop down and bearish consolidation. But in near term, we're actually still bullish consolidation. You see this bull flag much like on Bitcoin. So let's rewind the time a little bit, zoom back out, and see where we are with this chart. You can see clearly, just like we've got an inclining trend line right here on the chart that shows price action when it breaks, it's come back up, and it had a nice bounce up. We're currently in the stage of that breaking. We're right here on the threshold of a near-term bounce on Ethereum. If we have the bullish scenario play out on Bitcoin, This likely will spread over to Ethereum. Next resistance for a move up, and this will be the bullish case scenario at nearly $2,800 on the chart. Now, a break point for further downside on Ethereum is on this inclining parallel channel at $1,761. Next level of support drawn out by this trend line. You can see here I got a pivot high. Price broke above, came back down and retested that area. This should be a solid level of support at $1,351. But really, Bitcoin and Ethereum should be bouncing up in the near term. I favor a little bit more upside on Ethereum. Next up, nat gas. Nat gas today was looking like it was bound to tag this $2.71 level. It got as low as $2.77. So it didn't quite tag that area, missed it by just a little over 6 cents, and since bounced up, forming back into the consolidation that occurred over the last couple days. I still anticipate this 271 level to be tagged before nat gas can start moving back up, potentially testing the bottom end of this parallel channel. All right, into the big story of them all, guys. Check out Nvidia. What a nasty sell. And guys, too, please take note of this. We confirmed in the parallel yesterday, right? So now that makes this breakdown underneath the parallel a failed move to break into the parallel, all right? Whenever you have failed moves in stocks, you generally get some of the biggest moves in the opposite direction. So let's see where that could take us, all right? So we jump into Nvidia's chart again, and you can see here this area that was in contention, getting back into that parallel has failed. Beautiful red candle. Also, nice big red candle. Look at that red candle. So if that is going to lead to further downside, the first area of support will reside on this inclining trend line. You can see it just recently tagged that level on February 5th. This level that will be support is $180.22. But be mindful, we hit it, as I've said, already just beginning of this month. So that's not a long time frame considering this is from the April lows. If we keep hitting it, especially if we keep hitting it in rapid succession, that's going to weaken it even more and open the door for the next support just under $170 to be tagged. Now, just please note, we've been in this range, basically dead money for Nvidia ever since August of last year. Now, if we start deviating and really breaking from this range, that's when I think the markets will really start having a little bit more concern with the overall trajectory of the larger indices like the S&P 500 and the NASDAQ. And that level, when it breaks, as you can see clearly in this consolidation, will likely coincide with the break of this $170 level. So keep that on your radar, at least for the near term, while price is still meandering its way back down here. Next up, AVGO. Now this stock too was hit hard earlier in the day, all to recover most of its losses. Fantastic recovery here. You can see post-market hours coming down even more. Look at this 10-minute decline on AVGO. This was actually leading the way down. When Nvidia was down about 5%, AVGO was down about 6%. Beautiful 10-minute bottoming tail ultimately led to price action rallying all the way back up to 321 to close the day. All right, so if we do have a further breakdown in Nvidia, you can guarantee AVGO is likely going to feel some pressure too. Next minor support down here at this low pivot, which is going to be at $295, followed by the bottom of this inclining parallel channel. Now notice this parallel channel has only been tagged once on the bottom end. So this area should be pretty decent support right here at $290, especially if we get a sharp plunge straight down into it. So be mindful of that level. Next up, we've got a couple earnings plays on Zoom. You can see here on Zoom, did miss earnings per share just slightly though, 3.2%, but beat on revenue by 1.04%. So nice beat. Guidance wasn't as strong as what some analysts anticipated, so the stock did sell off, but I think this is a little bit overblown. At one point, more than 14% down on the day, sub $74 before closing up here near $75. As you can see here, inclining parallel channel that has since now been broken. We have not confirmed underneath, so be mindful of that. Next support at $71.30. Price could eventually in the next few days come tag this, get support to come reattack the bottom of this parallel channel. That could be a great near-term swing trade. Also note on the daily RSI, look down here, we're at 30 0.15, even with the close up not at the bottom of the charts today. That means we're oversold near term, could be due for a near term bounce, even with the bad earnings. But please note, don't rush into these. Sit back, wait for support levels to get hit. If price already runs away and tests this now, so be it. Just sit back, be cautious. If support levels get hit, operate like a robot. You can enter these trades at that point, anticipating a bounce and a take profit area near the $78 range. Next up, another earnings play. We've got SJM, the JM Smucker company. You can see here, beautiful beat. We had a double earnings per share beat, 4.65 in revenue by 0.71%. Nice gap up over all of the previous consolidation. And in addition to that, this is a breakout scenario, guys. Look in the longer time frame. We've got a declining trend line coming here from January of 2024, holding down price ever since then. And then today's price action, boom, blasted off above this declining trend line. Now, one candle is fantastic, especially if you're in this stock already. You could have been taking some profits. Beautiful move near term from $94 all the way up here in 2026, up here near $120. So near term, a little bit overbought. Recently, the consolidation helped work some of that out, but near term, slightly overbought. I wouldn't be chasing this. Watch for price to confirm, get above this candle in the next day or two and close. And at that point, any pullbacks, especially any pullbacks down to this trend line and or the top of this consolidation, become buying opportunities for the next resistance at $25.78. Next up, IONQ, another earnings play as well. You can see here, beat, incredible beat on earnings per share, 480%, and then revenue by 53.26%. Great beat there here on this chart, and you can see investors were rewarded as IONQ jumped up 21.7% on the day. Note, we are right into resistance. Now, this is a near-term one from October of last year with this declining parallel channel. This parallel channel likely will hold price here, but please note too, this is a strong earnings beat. This likely has a better chance of breaking through without any sort of consolidation to give it the momentum to break through. So should this break through in the next day or two, the destinations for IONQ, for me, where I see the bullish case scenario is up here at $55.37. If I scroll back out further, you can see this longer term parallel channel, and you can see when price confirmed beneath right here, it came back up, retested inside, tried to get above, could not do so. Since got rejected, I anticipate fully price to come back up, at least test this consolidation at $48, could also start consolidating at that time, and then ultimately end up at the bottom of this parallel channel. Very neat play here on IONQ. Let's see if it follows through tomorrow by breaking through this near-term parallel channel. Also, a viewer request was Rigetti, another stock in the same sector, quantum computing, and it too rallied today because of the sympathy play with IONQ. Now, this stock is up 5.73% today, getting very close to the center part of this declining parallel channel. That should be resistance in the coming days at 1948. Should IONQ accelerate through its parallel, next stop for Rigetti will be at $22.46. I caution investors here, though, because there's always a pending chance that this head and shoulders pattern measured move of $13.27 gets pushed and tagged. So we could eventually have a nice run here near term, but if that loses any sort of steam, we could be coming back down here at $13.27. But also, this move played out over 90% thus far. You can see we got down near $14.92, but just didn't tag the $13.27. So just keep in mind, we could very well be out of that negative sentiment. This earnings IONQ could kick everything off, tee it off to start pushing positive sentiment in the quantum sector. But as of right now, this still has to be on your chart. You have to remind yourself it's a possibility of that level getting tagged to complete this head and shoulders measured move. Next up, Spotify. Now check out Spotify. I have a couple things to show you on this chart. Beautiful push today, up 6.99%, while the rest of the market was really getting hit hard. You saw the rest of the indices were down on the day, yet Spotify pushed up. You got to recognize that relative strength. Notice we pushed up from this recent low, put in great consolidation, and we're doing so right beneath a significant level on the charts. You can see this from a previous pivot high back here in December of 2024 when price got above it, We came back down, retested it again, and then took off to the upside. And then when we finally came back to this level, you can see the consolidation, small bounces that occurred before plunging back down through this area. So clearly this is the level to beat if you're a bull on Spotify, $506.47. Notice though too, that level comes and coincides with this declining parallel channel. So this should be stiff resistance for Spotify. Bulls on Spotify want to watch this price action consolidate to break through and eventually attack the 550 level that you see there as the next resistance. But one thing I want to give you some insight on, and today we're going to study this for some education. We're going to study these simple moving averages, and I'm going to show you a couple different charts highlighting what to anticipate and how these foreshadow moves so you as an investor won't be caught off guard next time. All right, so we get back into the chart. And you can see I threw the simple moving averages on with this red line being the 200 daily moving average and this blue line being the 50 and the yellow being the 20. Well, you can notice here when price action with the red 200 moving average cut through the blue 50 moving average, that's a death cross on the daily time frame. And since that point, right here at that point, we had price action on spot rally up, but every continuing rally failed because all of these simple moving averages inverted. Now we have the 200 on top, the 50 in the middle, and the 20 down below. So now spot's got some work ahead of itself to move up. Not only do we have this line as resistance, the declining bottom of the parallel, and the 50 daily moving average, a lot of resistance here to get through, but that's one way to know as an investor too, if you flip these moving averages on, if you could be in trouble, if your average is up here at $600, we likely aren't going to be going there anytime soon. We're going to have to work our way through all of these levels of resistance to get there, and one way you can spot that very easily is just flipping on your simple moving averages. Next up, GoDaddy. Look at this beautiful bounce. Another stock rocketing up on the charts today, up 8.95%, while the rest of the market was really getting beaten up. Very nice move for it though, but also notice too, on the simple moving averages, when I flip those on, guys, what occurred over here when the 50 crossed underneath the 200? Yeah, we had a little bit of a rally, but that signaled almost the end of all of that bullish activity, and price just plummeted down here on the charts. Huge move down. This was another death cross scenario where even if price was rallying up, you could say, guys, this could be your time to get out of the stock. Now, yes, price can invert some of these moving averages, but this is a warning right here. Might as well be safe rather than sorry, not lose that investment. That way you can always fight another day, invest another day. Guys, this is a marathon. This isn't a one and done, I'm rich today scenario. This is a long-term game. So you want to make sure to mind these sort of indicators. Pay close attention to these to help you out with your trades, ones where ultimately you're gonna get in trouble with, all right? So daily though, on the GoDaddy chart, near term, we've put in our bottom. We got a beautiful daily bottoming tail at $73.06. It caught support from all of this consolidation that you see strung out for multiple years, has since rocketed back, $13 pop. Very nice move. It's gonna be running right into resistance where this consolidation is from $87 all the way up to 92. That's your next major resistance level, but considering this thing has been down in the dumps as far as the RSI for quite some time, we could see a decent push up, consolidation, and then potentially even hit this $106.79 resistance level. Lastly, we got CrowdStrike. CrowdStrike today, you can see also just bringing this chart up for you with follow-up analysis. I brought this up on Monday when this chart was nasty and red. We had these two huge red candles, and I sat here in this show saying, guys, more than likely we're coming back up here to this 385 level. Even though price was down here, potentially could get a 3-bar surge down. Even if price went down here to 328.65, I was still calling for this 385 level to get hit, and boom, hit today, just like I said on Monday's show. And if you don't believe me, go back and watch Monday's show. A lot of great information on that show too to help you out. Guys, don't forget, tomorrow morning, the PPI at 8:30 could change everything. I'll be hosting Ben's show at 8:45. Can't wait to see you guys there. Don't forget to like and subscribe this video. Also, please send this out to your friends and family so they too can learn about technical analysis on the charts. Until then, the next Trading the Close is on Monday. I'll see you guys then. Have a fantastic rest of the day, folks. Take care.